Hi there, welcome to Kneppyinvests. If you ever frequent any of those social media investing platforms or groups, like maybe Hot Copper or those Facebook ASIC groups, you always see people comment that whenever they see shares of a company drop by a significant amount, there's someone in the know knows something that the rest of the market, particularly retail investors, just don't know. And that would be insider trading, and that is illegal. You're not supposed to do that. So, what is insider trading? It's when you know information that hasn't been released about the performance of a company, and you take advantage of that information by buying or selling shares. Again, it is illegal. You're not supposed to do it. But on occasion, you will see some, I won't call it suspicious, I'll call it unusual trading in the shares of a company just before the company releases some good or bad news. And we saw this the other day with a company called Mitchell Services. The day before they released a trading update, we did see some unusual trading in the company's shares. Now, in my opinion, in these sort of situations, the Australian Securities Investments Commission should step in and investigate. But I don't think, I can't think of one single time where they have investigated one bit of unusual trading in the shares when this does happen. So I'm not sure what they're doing, but I think these are the sort of situations that they should step in and investigate. I have looked at Mitchell Services in the past, and in fact, about 18 months ago, I did a video on this company, and I was wondering if this was the cheapest stock on the ASX. Now, at this point in time, the market cap of the company was about less than $100 million, yet they released some really good numbers for the first quarter in financial year 21, had revenue of 53 million, EBITDA 10.4 million, operating cash flow of 9.5 million. They're also paying out a dividend and also reducing their debt. So this trading update was released on the 19th of October 2020, and the market did react positively to this particular announcement. Share price did increase 9%. So at this point in time, I was thinking, well, this could be a very cheap company on the ASX. So what has happened over the last 18 months? And has this thesis, as this is the cheapest stock on the ASX, come to fruition? Fortunately, Metro Services did release a trading update for the third quarter of financial year 22 on the 27th of April 2022. So we compare those two quarters, the one they released in October 2020 and this one, just to see how the company has been growing, if it's been growing at all. And really, over the last 6 quarters, there's been very little growth in Mitchell Services, a little bit of growth in revenue, but EBITDA and operating cash flow actually have gone backwards over the past 18 months. So revenue now is up to 54.5 million. However, EBITDA down to 8.6 million and operating cash flow down to 6.1 million. So this company hasn't really grown over the past 18 months. And growth is very important when you're considering, wondering whether a company is cheap, fairly valued, or expensive. Now, you will notice if you do read this particular trading update that the company is fairly bullish and they're highlighting the best things about their quarter. So they mentioned in a commentary that they recorded the highest ever revenue for any third quarter and its highest ever revenue for any single month, which was the March, recording $20.2 million of revenue. And the company's management should do that. They should really highlight the positive aspects of any sort of release. But they also should mention some of the negative things. So I do think management of a company should be, I think, fair, should be non-biased when they're talking about how the company is performing. I don't like companies who just completely focus on the positives in any particular quarter or half year or even year. And if we take a look at how Mitchell Services share price has performed since that quarter one update in October 2020, share price did rise 9% on that day. And I thought that was a potential breakout. But if we follow the share price from that particular day all the way through to February of 2021, share price really didn't perform. And then the company released some bad news in February and the share price absolutely tanked. And in fact, that was a catalyst behind the company's sentiment, or the sentiment in the company changing or shifting from being neutral to positive to being negative. And we have seen share price drift lower ever since then. There's been times when it looks like the share price was trying to break out. This was towards July and September of 2021. But overall, the share price has been drifting lower. In fact, share price has gone down from about the mid 50 range to the mid 30 range. So the market is not really interested in this company at all. And then we get to the 16th of May. Mitchell Services shares, the share price is just drifting lower. No real interest in the market. And then all of a sudden, on the 16th of May, the share price of Mitchell Services dropped 8% in one day. Now, in itself, that's not unusual because shares in this company can be quite volatile, but it's the volume that was the real indication that there was something unusual going on here. 1.7 million shares were traded in Mitchell Services on this particular day. If you look at the previous 2 days, 400,000 shares were traded on the 12th of May, and only 100,000 shares were traded on the 13th of May. And if we go back further, this was the highest volume this company had seen in over 1 year. I think it was 15 months, the highest volume traded in 15 months. So what's going on here? That is unusual. And in fact, the ASX should have issued Mitchell Services with a please explain an ASX price and volume query, because share price dropping 8% on unusually large volume is suspicious and unusual activity. Now, share price of a company decreasing 8% on unusual volume in itself does not mean anything. But when it happens, the day before a company releases a profit downgrade is highly suspicious, in my opinion. And that's exactly what happened with Mitchell Services. They released on the 17th of May a profit downgrade. Now, they named this particular announcement as a trading update, but it was a profit downgrade, the worst sort of announcement a company can release to the market. Now, they did have a few excuses about why they have downgraded profit, and those two excuses were record levels of rainfall and also COVID-19. And because of those disruptions or those factors, the company now expects EBITDA for financial year 22 to be between about 31 and 35 million, down from the previous guidance, which was between 40 and 44 million. Now, they do expect this just to be a temporary disruption because it has delayed some of their projects, which means as we go into financial year 23, that should be a really good financial year if some of these projects get back up and running. Now, they've also mentioned that they've also won new contracts and had some contracts extensions. So that does mean revenue should not be that affected. In fact, they have not changed their revenue guidance. It's still between 200 and 220 million. So really, these disruptions, these record levels of rainfall and COVID-19 have only really impacted their operating margins. The market absolutely hates profit downgrades. If you had to pick one announcement that would affect the share price of a company more than any other announcement, it would be a profit downgrade. We did see Mitchell Services share price drop 17% on the back of this particular announcement or this particular profit downgrade and close at about 28.5 cents on the 17th of May. We did see a bit of a rebound in the share price on the next day, which probably should be expected because in the commentary of their profit downgrade, they did mention, and I'll just quote this, it is anticipated that the capital spending on the company's organic growth strategy will be largely complete by 30th of June 2022. And as stated in previous quarterly reports, the company will focus on generating strong cash flows with the world-class fleet that it has invested in. The company anticipates that the temporary disruptions in operations experienced during financial year 22 will lessen in frequency and severity during financial year 23, allowing its expected operating rig count to drive increased revenue and earnings for the year. So management is a little bit more bullish about financial year 23, and because they're not going to be spending as much money on capital expenditure, their cash flow and operations should start increasing. So I think those two factors did lead to a little bit of a rebound in the share price. And it also makes this company interesting at these valuations and these levels. So I will take another close look at Mitchell Services. But I don't think the management of this company are highly thought of right now, simply because of how the share price and the company has performed over the past 18 months since that bullish announcement in October 2020. And if we take a look at the weekly chart for Mitchell Services, the share price finishing at 28.5 cents on the 17th of May does correspond to a really interesting level. It actually coincides with the lows we saw during the COVID-19 panic that happened in March 2020. During that time period, the shares fell from about the mid 60 range all the way down to about 25 to 28 cents. In fact, the shares fell to a low of 26 cents during 1 week, but then rapidly rebounded. So right now, the sentiment or the negative sentiment in this company is comparable to the COVID-19 panic. And that's another reason why I'm going to be taking a closer look at this company to see if there is some value right now. That's all I have for this video on Mitchell Services, looking at their profit downgrade and questioning whether there were some people in the know of this downgrade who took advantage and sold some shares. Now, that's just speculation on my part. It does look quite interesting, but I won't say suspicious. Definitely looks interesting. And this is the sort of situation where I do think ASIC should investigate and see if there is some weird things going on. More than likely, they wouldn't find anything, but I still think they should investigate these sort of situations. If you do have any questions about Mitchell Services, about whether this was insider trading, it does look unusual. I'd love to hear your thoughts, your questions, your insights even. So leave your comments in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.